Everyone loves YMAX for the massive payouts, but almost nobody is talking about the real math behind those dividends. And honestly, what I found shocked me. Today, I'm exposing what YMAX actually pays, the hidden trade-off investors don't notice, and whether this ETF is truly a smart income play or a trap. So stay tuned. Welcome back to Simply Money. This fund is basically a bundle of multiple YieldMax ETFs, YMAX. Instead of buying each one separately, you're buying a single fund that spreads its money equally across all of them. Every month, it reshuffles. Each YieldMax ETF has the same weight. Because these ETFs use option income strategies, the fund can potentially generate weekly income, which is one of the big selling points. But here's the catch. Your upside is capped. That means if the stocks behind these ETFs go up a lot, you don't get those big gains. Your downside is not capped. If those stocks fall, you can still take the full loss, even if the income doesn't make up for it. You get income potential, but you give up big growth, and you still take on the risk of losses. The fund isn't connected to or partnered with any of the companies that the underlying ETFs track. It just uses options on them. Why someone might choose this fund? 1, weekly income potential. It's designed to pay frequent income by using YieldMax's option strategy. 2, it's diversified exposure. Instead of being tied to just one stock, Tesla or Nvidia, you get a basket of different YieldMax ETFs all at once. And 3rd, simplified access. You get the whole YieldMax ecosystem in one ticker without managing lots of separate positions. But there's important distribution details. The headline yield numbers look huge, but most of the payout is return of capital, ROC, in this case over 81%. Return of capital is simply giving your own money back to you, and that can erode the NAV over time. We're going to look at our spreadsheet and do a hypothetical. What if I put my entire income portfolio into YMAX? What would it look like in various drip scenarios? So here we go. For those who are new to the channel, what we have here is our spreadsheet where we do a hypothetical. You can check out my real portfolio on the channel. But right here, we're doing, what if I took my entire income portfolio and I threw it into YMAX? What would it look like? How would it have performed since inception? And what can we do to help mitigate the NAV erosion? The inception of this was January 17th, 2024, a price of $19.90. With the $525,000 investment, we would have got 26,382 shares. That's where we're starting out. And the hypothetical goes from there, looking at the different scenarios. The first scenario we'll look at is 100% drip. We're just accumulating funds. We're trying to build up our share positions, and then we could go from there. This is what full drip would be for. What would that have looked like? I want you to look at a couple things. We'll start over here with the share price. We started at $19.90, and this has been right at 2 years now. We're just a month shy of 2 years. You can see the steady decline, and we were down to $10.71. This is where people freak out. They see this and they think this is a lost cause. I don't want to be in this fund, and it may be for you. You have to understand. So I'm going to start out here by saying this is not financial advice. This is for educational, informational purposes only. I am not recommending to put all your money or any money into YieldMax for that matter. I'm just showing you a hypothetical what it would look like for educational and informational purposes. Now, this is where people get really nervous. They see this in 2 years, it has dropped negative 46% in share value. We'll look at that a little deeper here in a minute, but that's the reality. That's what's happened. And we're going to look at here. You can see the distribution amount at 53 cents. Look at this. People are loving it here. Now, this is monthly. You got to remember, this switched in September of 2024 to paying weekly. Prior to that, you can see these larger distribution monthly payments, and then it gets cut down because it pays weekly. That's why these amounts are so high here. But even on this, look at this over the first few months, you're looking at $14,000 up to $21,000 a month that you're receiving off of this distribution. Now, this is growing exponentially because as you're getting this each month, you're buying more shares. and increasing your share position, because this is 100% drip. As we go down through the weekly, and we'll come down here further over the last few months, you can see this has been producing a very fluctuating amount weekly, from 4,800 up to 12,100. This has fluctuated a ton, as you have 8 cents distribution up to 17 cent distribution, 19 cents here. A lot of fluctuation, which is making this weekly payment fluctuate quite a bit. But even with that, look at just November. We had 4 paydays there. You would have had 11,000, almost 10,000, 8,500, and 6,700. That's a pretty nice paycheck each week. But again, this is being reinvested into YieldMax. As you can see, over this 2-year period, you've actually received $623,000 of distributions that you have bought more shares. You've increased your shares by almost 42,000 shares. You're up to 68,000 shares here. Because even though this has dropped almost by half, you've still increased your portfolio balance to $730, almost $2,000, up $206,000 or 39% over 2 years, because you're accumulating this huge shareholding and then reinvesting and getting more and more. So if you were to turn drip off now, you're looking at $7,000 payment this week, and look how many shares you have. That is the 100% drip. Now let's look at the 50% drip. This changes things a little bit. For those who haven't watched the channel, this is the full drip. We take half of it. So half of it, you're buying more shares over here, and the other half is income. So you would be living, this amount here is the amount you would be collecting to live on. Again, these here are monthly, then it drops down here to weekly. And we will see, as you continue to buy still a large quantity of new shares each month, and now with the change each week, we'll come down to the bottom, see what it's doing here of late. Over the last few months, you can see you're looking at weekly between $1,600 to $3,900 each week. It's been pretty consistent. There's been a few smaller amounts here, but overall you're looking at $2,700 to $3,000, almost $4,000 per week from these distributions. In 2 years, you've collected $246,000 in distributions. That's $123,000 a year of income, and then that amount that you're putting back in, because this amount is what you've collected. You're also buying more shares, which you've gained 16,000 more shares. But even with reinvesting 50%, your portfolio balance, because of this massive NAV decay, your portfolio balance is down $69,000. If you bought this, did an all-in 2 years ago, and you started living off this and living pretty well with $123,000 a year income, but you've also dropped your portfolio balance down $70,000 or 13%. Long term, that would not be sustainable. So something to look at. And that brings us to our zero drip. And let's say for whatever reason, you went all in and you just took the distribution. That means you're never buying more shares. This amount that you have here, 26,382, is how many shares you currently have. But since doing that, you've been collecting these monthly and then weekly distributions. Each month you would have been getting early on here almost $20,000 a month, and then it went to weekly. And where would we be at now? As you can see, this actually declines weekly, because we were up $5,000, $6,000, $7,000, $8,000. Now we're looking at $2,000, $3,000, $4,000 a week. Still a nice income. If you're looking at $3,000 a week here, it's generating a nice income, but it is declining as the share price declines, this declines, and your shares stay the same. And that brings us to your portfolio balance in 2 years would be down almost half, about $242,000. Now, if you were taking this and spending it and watching this decline, that would be very scary. Now, if you were taking this and reinvesting it into something else, that's a different story. And some people do that. They get something like this to generate income and then reinvest in something else. And everyone has their own reasons for why they do it. And you have to decide, what are your goals, your risk tolerance? Why are you investing in something? And know what that is, because when the market gets rough, when things get rough, you have to know, have my reasons or has the fund goals and performance, is it aligning to my goals and my risk, or has something changed that I no longer want to be part of this fund? You can't just let the performance be what bases your decision on whether you get in or out. And I say that carefully because if you look at the market, just look at SPY. If you look at back in 2020 during COVID, I always use that as an example because it was very short-lived that you saw a market drop of about 50%. And if you didn't know why you were in that and you panicked just because you saw the performance and you sold, by December, it had surpassed where it had fallen from. So it had actually regained what it had lost and some. You would have lost all of that because you made a decision based strictly off performance in a short term, not looking at the long-term picture. The fundamentals didn't change, your reasonings didn't change. So you have to know those when you're investing and make sure you understand that. And it's no different with these types of funds. If you're into YMAX, you need to understand why and make your decisions based on that why. While you saw a $242,000 decline in your balance, you were able to collect almost $400,000 of income. With a full drip, your portfolio balance is up almost $207,000 or just under 40%. So about 20% per year total return. I would take that. Very, very strong performance. Now, if you went 50% drip, you received this $246,000, but you lost $70,000 in balance value. Your total return would be $177,000 or 33, almost 34%, about 17% annually. Again, very strong return. I would be happy with 17% annual return. Now with zero drip, you collected almost $400,000, but your value dropped $242,000. So your total return is almost $154,000 for a 29.31%. So just under 15% annually return. Again, excellent return. If you were to say, hey, I'm going to put money in and you're going to get 15% return for 2 years straight, that would be an excellent choice. And most people would do that. But this is set up in a way that it's not how people normally like seeing it, and they have to know how these funds perform and why they're in it. That brings us over to this part of the chart. If you like these charts, you can get one in the Buy Me a Coffee down below. This is the YMAX All-In spreadsheet. I appreciate your support, those who have bought them, those who have bought me a coffee or a beer. I appreciate that. And I do appreciate the support of liking and subscribing. Helps the channel tremendously. So thank you all for all the support you give and making comments and sharing in the community. That is why I started the channel, to help the community, to help others, to learn myself. As I do this, I learn as I dig into these funds that you guys recommend, or I look into even my own funds deeper. It's really educational for me. So I appreciate it and I enjoy doing this. And that brings us to our distribution rate that we can set. Now we're going with this to try to see what would we need to do to reinvest to keep the balance around the $525,000. We set it at 65% you're going to reinvest and 35% you're going to take out, you're going to live on. And that leaves us, this one's worked out, just happens to work out almost perfectly. We're right at the same amount we started at 2 years later. We have gained, though, 22,000 shares because we've reinvested 65%. So we've reinvested this $343,000 worth of distributions, but we've kept out $184,000 and we've maintained our balance. If you had set it up this way, 2 years later, you would have been at the same balance. Your portfolio wouldn't have grown. It would have stayed right at the same amount. Yes, it went up sometimes and down some, but at the end of this period, it would be basically where you started. But meanwhile, you've also collected $184,000, so about $92,000 a year of income. That's excellent income off a $500,000 portfolio. Again, I'm not recommending to go all in on this fund or any fund, but it just shows you that the numbers aren't always what they appear. If you look just at the share price performance, you see that steady decline. You're like, oh, I'm not going into that. Yet it's returned 20% total return over the course of each year. On average, a great fund. This is where you have to understand how these funds perform and how to use them. Perhaps you do want to take the full distribution and you're going to watch your portfolio draw down and you're okay with that. And you're reinvesting this $400,000 into other funds, dollar cost averaging, finding things that are on sale, and it's generating income for you. Again, everyone has their own reasons for why they do it. The funds that I'm in, and I'm not in YMAX, just FYI. But the funds I am in, I'm doing a full drip currently because I don't need the income. And I'm just building up my share positions. And then when I go to need the income, I'll turn off the drip or do a percentage of the drip. Or maybe I'll take full distribution off one fund and nothing off another fund because of the performance, and reinvest some of it into the lower performing fund at the time, the one that is undervalued. And so there's a lot of flexibility people like. I don't have to worry about selling shares. I can actually buy shares that are on sale even while I'm using the income. So a lot of options that this provides. What are your thoughts? Are you a YMAX holder? Do you like YMAX? If so, why? How long have you held YMAX? Share that in the comments below. Are you in the green, red? Are you dripping, not dripping, doing a percentage? Share with the community what your strategy's been as we continue to dialogue and help one another. I appreciate you joining me, and we'll see you next time on Simply Money.